All right, what is going on, YouTube? And welcome back to another edition of Top Down Analysis with me, T. Hobbs. First of all, thank you guys so much for tapping in with me again. Uh, Trader Shop is growing. We're growing in knowledge, we're growing in strength, and we're growing in numbers. So we're approaching that 2,000 subscriber mark. So we want to thank you guys for that. Myself and Justin would really like to thank you guys for helping us out. And the way that we do that, we continue to grow. We just ask you guys to tip the barbers, aka hit the like and subscribe button. Turn those notification bells on so you get notified every time we go live and or put out a video. Additionally, we'd ask you that if you're using Apex as a company or prop firm, especially, you can use the discount code that is scrolling across the screen. That helps us to get equipment, buy some shoes, roll some dice, go gamble, whatever. I'm just kidding. But you could use that discount code and it's going to get you 80% off on Apex accounts. The 150Ks are 80% off. Plus, you get like an $85 activation fee. Plus, you get 1 day to pass. So that's kind of my little advertisement. Last but not least, you can join the Discord. The Discord link is in the description down below. It is a paid Discord. It's $15 per week or $40 per month. So if you enjoy seeing these top-down analysis, if they've helped you out in any way, consider joining. You can actually ask me any question in there, and you can understand how exactly we get to these top-down analysis that have been pretty freaking accurate, I must say. All right, so now that we got all the cringy stuff out of the way and you made it this far in the video, I thank you guys so much. We can jump right into the top-down analysis for both the NASDAQ and the ES, right? As you guys know, we like to start from the month down to the weekly, down to the daily. So we'll start there. We got 17 days and 3 hours left in this month, which is crazy when you think about it, that we're already in more than 50% completed on the year, right? It's crazy. It seems like we just started this journey, but we're here, right? As you guys always know, I like to point out the cup and handle that was gifted to us from heaven above. It is the most powerful cup and handle in the universe, right? The history of the stock market has never seen a cup and handle like this. I don't know how accurate that is, but that's just how I explain this cup and handle, right? On the monthly chart, what do we have on ES? We have ES putting in an all-time high again to close on Friday. We ended up closing back down below the all-time high, but you can see in regards to the candle structure, the bulls are in control. I feel like I'm on repeat because I say the same thing every single week, and every single week I get somebody to come to the shop in the live stream and be like, we're shorting this market. I'm like, all right, your funeral, right? Like, it is what it is, But on the monthly candle for NQ, you can see the same thing. The strength of the bulls was tested at the high, right? We put in a new all-time high earlier in the week at 20,939 or something like that. I don't know what the high of this candle was. Yeah, 20,970 was the high, right, for the week. And then we ended up pulling back about 200 or 300 points. But you can see in regards to structure, we're making higher highs, higher lows, and the month still looks bullish. Can this month reverse? Possibly. I just don't see it happening. So let's just drop down to the weekly candle and we'll discuss exactly what we're seeing on the weekly candle. When I say we, I'm coming to these conclusions completely on my own. This is not like a shared conclusion of the Discord or the Trader Shop. Like, it's not like Justin approves the top-down analysis. I just do it. No, I do it. I share it with the Discord, and they can, we debate it right after the stream. So right after I post this on YouTube, we end up debating the top-down analysis. Sometimes I'm right, sometimes I'm wrong. But if I've been picking bullish this entire year, which I have, I've been right all year. So it is that. So that being said, let's drop down to the weekly. And we'll see what structure is happening on NQ and ES, because you can see just from candle structure alone, they look slightly different, right? Now, because they've both been kind of leading each other, if one is strong and the other looks a little bit weak, but they're both in an uptrend, I usually give the nod to the bulls in this situation, right? Now, there's some little information that I want to add to this on the weekly time frame. The first is that obviously ES is stronger than NQ in regards to candlestick patterns. However, what did they both do? They both ended with higher lows and higher highs. That's not debatable, right? Why would ES be stronger than NQ, however? The thing that happened on ES did not happen on NQ and will not happen until next week. Well, not this week coming, but the week after next. That simple thing is that NQ has earnings in the tech sector, but it doesn't happen for another 2 weeks. ES actually has earnings in the tech sector, but it started bank earnings right this week and going into next week, or last week and going into this week, right? Pulling in, we have, Bank of America, JP Morgan, Wells Fargo. All of these banks never miss, right? Like they never miss. And if something breaks, then yeah. But mostly people pay attention to the guidance that the banks are giving. And if you notice on Friday, we had a massive rally on ES, and kind of like 50% of that rally was happening on NASDAQ. I like to credit that extra 50% of power to the bank earnings that ES has in its sector that the NASDAQ doesn't have whatsoever. If you look at the sector breakdown of ES and NQ, you'll see that the NASDAQ doesn't have much except for tech, and ES has tech, industrials, and a huge financial sector. So if the financial sector does well, you can accredit ES's strength to end the day on Friday to those bank earnings. We have another week ahead of us of earnings, and there's plenty of bank earnings that are going on for ES. So I would look to be ES to be a little bit stronger than NQ going into the following week, but you just never know, because we did have a huge fundamental catalyst that we'll talk about later in the video, right? So let's go into the daily time frame as we start to work our way down closer to price, and we can start to analyze what happened on both instruments on the daily time frame. Now, the big thing to note is pretty freaking obvious, right? The big thing to note is on Thursday, we had a huge sell-off of the market, right? I even posted on my Twitter page, and now I'm bearish, right? And then the bulls came back and was like, shut up, right? However, there is something that did not get accomplished on NQ that semi got accomplished on ES. The thing is that on ES, we actually broke the previous day high, which essentially we put in a new all-time high. On NQ, we were unable to trade within 50% of this candle high, right? Like we got up there and then we immediately rejected, right? That right there is the one thing that's stopping me from saying, oh, we about to rally to 22,000 next week or 21,600. I'm going to be watching this closely. I feel like, again, this part is on repeat. I'm going to be watching 20,673 very, very closely, right? I want to see if the market wants to run this high or continue to reject this high. What is that going to look like for me, right? Essentially, what I'm looking for is for the market to then come back up here and retest 50% of Friday's high, right? Sitting at around 20,533. That's what's going to be the defining factor for me to decide whether or not the bears actually want to truthfully defend this low, right? Or continue to go back down. Now, my thesis, right, is obviously in the bullish time frame, right? What I'm looking at is the fact that we swept this low right here, right? Down here, we swept 388 and we immediately found buyers. Well, why is 388 very important? Well, if we just drag 388, 368 all the way across, it's simply the market coming back in and retesting the high that brought the retesting the structure that brought the high, right? If we then go a little bit deeper and we take this high, right, and this low, and we run it straight across, well, the only thing I want to see now is either the market's going to fail to take this high and then trade back down to 20,043. That will be the perfect area, in my opinion, for the bulls to start to recover and go all the way back to the high. Now, where would that put us on ES, right? Very, very similarly, but with more strength, you would look for ES to maybe come back and close this gap sitting right here at that same level on NQ. That level on ES would sit at 55.87, right? So maybe NQ trades down into 20,043 while ES only comes back to 55.87. And once they both close their respective gaps, NQ comes down into 50% of its range. Now we got an opportunity for the market to trade right back up. Until the monthly, the weekly, or something on a higher time frame tells me to be bearish, I have no desire to look at this market in a bearish fashion. I'm going to continue to look at the market in a bullish fashion because that's all the market continues to show me. I'm not going to fall into the trap of being very, very bearish prematurely. I'm not looking to sell the top. I'm only simply looking to participate in structure as it's clearly being developed. And right now, the structure is clearly to the bullish side until the bulls show or the bears show strength, and they continuously show strength. They continuously show me that they can hold court, right, without the bulls aggressively just taking back the highs. So essentially, what I'm looking at, just to review, I'm looking at area 20,364 through roughly about 20,000 or 19,709. Specifically on NQ, I'm looking for 20,039 to hold on the daily. If we can hold this level, I'm looking for the market to go right back up, take the highs, and then we start printing in the 21,400, 21,600 range, right? If we fail, then I'm looking for a break of 19,726 on the daily and a failure retest back into that same level on the 50% of the range at 20,043. And then I'm looking for the market to start coming down and trading into 19,408, essentially coming back down and testing the next range, right? That is what I would be looking for ES on the daily. On ES, I'm sorry, that would be NASDAQ. On the daily for ES, what I would be looking for is the same thing if I'm looking to be bearish. I'm looking for the market to hold court above 55.45. If we break, the level to break would be 55.05. And if we break 55.05, then I'm looking for the market to come back down and start closing gaps down at 54.49. If we are to hold, which is more what I'm looking for, then I'm looking for the market to stop here, come all the way back up and give us that 3% movement, right? 3% would put us at about 57, 56 to the upside, and then to the downside, 3% will put us right at this level, 50% of this range at 54.17. So you can see how the 50% or the 3% puts us either putting a new high or coming back down and testing major lows. So I'm cool with this prediction, right? I'm completely okay with this because it lines up with the 3% average of the ES and the 4% average of NQ, right? I didn't do the range, but you guys can use that same range tool and do the math yourselves, right? So let's drop down to the 4 hour, right? And let's see exactly where I'm looking to trade in regards to the current structure. So what I'll do is I'll go into object tree and I'll turn on all of my supply and demand zones because at my very, very core, I'm a supply and demand trader, right? So we turn that visibility on. You can see I've already started kind of drawing out what I want the market to do. And if you want to see these levels, you have to come to the Discord and I'll show you those levels on a smaller time frame. Small plug right there, but you got to hold something back for the people, right? So what am I looking for here? On NQ, I'm looking for the market to come back in and close this gap. That gap for me sits between 822.50 to roughly about 979. If we fail here, I'm looking for the market to come back in and hold between 512 and 742, right? Once we get above this level here on the bullish side, that's where I'm looking for 21,600 to end the week, right? Not go into, that's just that one day, but it just depends on how earnings produce this week, okay? To the bearish side, I'm going to be looking for, just like I showed you on the higher time frame, I'm looking for 335 to start to break and potentially 214 to start to break. But to trade the day, right, because we just had a huge break to the upside, we just had a huge break to the downside. It would not surprise me if the market started the week doing this shit, right? Remember, we have the big earnings for tech coming up. What do we do before big earnings? What do we do before we break major structure, or after we break major structure? We end up consolidating inside a massive range, preparing for a big move. That big move could be starting to ready itself for the following week, in which we have Apple reporting, Microsoft reporting, Google reporting, Meta reporting. These are all tech earnings that have been on repeat. And then the following month, we have the big dog NVIDIA reporting, which is the whole reason why the majority of the stocks are even up here in the first place. So that range could sit us in about a 400 to 500 point range, and we do nothing but hold court, which will be completely fine with me because it becomes much easier to trade. We're looking to long the lows down at 20,448 through roughly 20,331, and we're looking to short the highs at 20,822 through roughly about 20,970 or something like that. The same thing could be said over here on ES. Remember, ES could bring us more strength because of the financial sector. However, if they both sit in ranges, then I'm looking, this is a 4-hour supply zone. It just doesn't show up for whatever reason. Or I think this is a 1 hour. So if I go down to 1 hour, this would be 1 hour supply at 56.97 through the all-time high at 57.08. And then I'm looking for 56.45.50 on the 4-hour side for us to create that nice strong range, right, that we could trade into. This could be a sign that the market's developing or engineering liquidity, right, on a higher time frame area to get ready to take the high and go higher, right? Until the market shows me anything different, I'm gonna go with what it's done before. This is what we did when we broke this high, right? This is what we did when we broke this high, and this is what we did when we broke this high. How is this any different than what we're doing right now? Until the market shows me a different pitch, I'm just gonna assume that it's getting ready to show me the same pitch. As the batter, right, I'm gonna be ready to receive the pitch and try to knock it out of the park. That's what we do here in the Trader Shop. Now, let's move on to the volatility index, because that also is something that I'm looking at as an indicator for my trading. When I'm looking at the volatility index, I start with the weekly time frame, just like I do anything else. And I can see that on the weekly, we have not tried any effort for the bears to come in. This is inverse to the market. So if this is trading down, it's bullish. If it's trading up, it's bearish. Show me anywhere where we've been anything but bearish, okay? We look at the daily time frame. We can see that there's an opportunity for the bears to do something, but have they taken out any highs? The answer is no. We drop down to the 4-hour, and this is where it looks semi-interesting. In regards to a sequence of price and how price moves, usually we get a tap or a break above structure, which is what we got here on Thursday, July 11th, and then we get a sweep of these lows. After the sweep of the lows, the market usually puts in a nice doji candle, essentially identifying a potential morning star pattern. Now, the goal of the morning star pattern is to reverse the structure, i.e. taking us back above this level here. If the VIX can trade above 1445, I feel like this shit is on repeat, but I'm gonna say it anyway. If the VIX can start trading above 1445, then and only then will I think the market's gonna start to trade lower. If the VIX stays in, however, a range, right, between 1445 and 1375, you can guess what I'm anticipating. I'm anticipating the market doing the exact same thing, whereas we stay in the range of 400 points or so, right? And if the VIX spends the majority of its time at the low of the range while sweeping the low, coming back in, sweeping the low and coming back in, guess what I'm gonna be thinking is happening inside of that range? I'm gonna be thinking that the market is preparing for another large move while buyers are accumulating positions, while at the same time screwing over retail that thinks we're going lower and or higher. Instead, we're just gonna sit in a range and bake, right? In regards to news on the week, if we jump over to Forex Factory, which is a newscast that I like to use, it's very, very popular. Some people use TradingView and other platforms. Me, I prefer Forex because it just, I don't know, it gives me nice colors, right? Red means, important, right? Monday, finally, we're starting off a Monday with red folder news. I really love that, except red folder is followed by Mr. Purple Tie, right? That just screws all price action up, right? So first we got manufacturing index on Monday. That starts bright and early before the market even opens. And then right at noon, which prayerfully I'll be out of the market by then anyway, Jerome Powell is going to speak. Now, where is he speaking? Because that becomes important. He's due to speak at an economic club in Washington, D.C. Audience questions expected. Now, does this move the market? It just depends on the type of questions that he asks. Sometimes it's a big nothing burger, but it's still red folder news because the dude holds all the cards. Let's be real. If we go into Tuesday, however, we have core retail sales on Tuesday before the market opens. Huge market mover. Expect extreme volatility, right? And maybe we don't get that range. Maybe we just sit there and we start to break out or break down, all right? July 17th, right? We come in and you can see we don't have much red or, or red folder news at all, but it still can be a day just because Monday and Tuesday historically puts in the higher, the lower of the week. Wednesday is a day that we can break out right? Or again, we could be at the low or we could be at the high, and we could have those huge moves inside the range. So look out for that on Wednesday. As we start to roll into Thursday, you will see that the market will start to make a decision in regards to the range, or it'll just be at the low or at the high and then come all the way back down. When we're in these ranges, I expect strong moves to the down or upside of that range, right? So we got unemployment claims that can help fundamentally push us in one direction or the other, right? That's going to be Thursday before the market opens once again. And then we got FOMC member Logan speaking. I don't even know who the hell that is. I really don't care. I'll be out of the market by that time. By Friday, again, we have nothing, right? Absolutely nothing. But remember, Friday is one of those rally or trendy type days where the market has gathered all the information that it needs, right? And now it's ready to make its decision on which way it wants to go, right? There's one more thing that I want to share with you guys. Just give me a second as I pull it up here. I'm looking for earnings whisper because this is another thing that I use to kind of look at the market as a whole. Last but not least, I'll leave you with what I was started with, right? Well, it's actually not the last thing. I got one more thing, but Monday, Goldman Sachs before open, First Bank, right? I don't know what some of these banks are at the close, but this is what I'm talking about when I talk about the financial sector. Tuesday before open, Bank of America, Morgan Stanley, Charles Schwab, ENC, right? Interactive brokers, blah, blah, blah. But these are all in the financial sector, right? We go into Wednesday. All week, this is going to be happening, right? So it behooves you to understand that Bancorp is going to be reporting. United Airlines, all these things sit inside the S&P 500. If you don't believe me, go to TradingView. Just look up the breakdown of the S&P 500, right? Then on Thursday, this is going to be a good day to kind of look at the Dow because this is the industrial sector that's going to be reporting as well as the financial sector. If you don't know where D.R. Horton is one of the largest builders in the country, right? Whatever they start to say about the housing market is going to affect the industrial sector, right? You start to look at Netflix, PPG, that's the people that make your diapers, right? Procter and Gamble, right? You want to know what these people are saying about the economy because it's going to move that industrial sector. So maybe look at what the Dow is doing on that day. American Express, another financial reporter on Friday, big market mover. So it's going to behoove you to understand exactly what has happened on these days. Now, the big finale, right? The last but not that, again, it's political, so I'm not going to be discussing it, but I'm just going to give you a warning, right? Going into next week. The assassination attempt on Trump, I don't have a bias on politics. I don't give a shit, to be quite honest. But when it starts to affect the money, i.e. the market, you should be aware that this could bring some extreme volatility into the market. The only thought process I have is how it affected Bitcoin. Bitcoin rallied off of this news. Does that mean that the market is going to be bullish off this news? It's a possibility, but it's something you should definitely take into consideration. Maybe taking a look at how Tokyo and London is reacting to this type of news, right? And seeing what the market potentially could be pricing in is something you should focus on. Ultimately, it's going to be dependent on how the volatility index is and how the ES and NQ is going to react to all of that volatility is the only thing I inherently care about. That being said, ladies and gentlemen, I want to thank you guys so much for your time. Once again, stopping by to the top-down analysis with me, T. Hobbs. Please make sure you tip the barbers on your way in, on your way out. Come back and stop by Monday through Friday. We are live for about 3 hours, giving our pre-market analysis, breaking down our live trades, and then later explaining exactly everything we do in preparation and also answering all of your questions while staying very, very comedic, right? That's what we do, right? That being said, I thank you guys so much for your time. My name is T. Hobbs. This is the Trader Shop Top Down Analysis, and we'll catch you on the next one, man. Peace.